Hello and welcome to the weekly wrap video. Just a couple of things to brief you on from the past 5 trading sessions. Then there's been two major themes, one of them geopolitical, one of them more macroeconomic, as fears continue to emerge out of China that the economy could see a pretty significant slowdown in the first quarter of 2014. This is after trade balance, industrial production and retail sales all consecutively missed expectations, pointing towards a potential pullback in the growth story over in China. This has also been cemented by a number of corporate bond defaults for the first time in China's history. So it was kicked off by Chaori Solar last week, but much of that filtering through into this week as we hear more and more reports of steel mills and steel companies having trouble paying back their loans. So this is particularly significant given the level of copper financing that is present in the Chinese economy. As such, these corporate bond defaults have really dampened the demand for credit and as such dampened the demand for copper imports to China, sending the price spiralling to multi-year lows in this week alone. Analyst expectations were that the Chinese authorities could enact some sort of action in order to stave off this slowdown in growth, potentially some sort of cut to the reserve requirement ratio, currently standing at around 20% in China. But the latest government source comments do really suggest that this is not the case, as the authorities are actually pretty comfortable with a slowdown in Q1 as long as they still hit their jobs growth targets. And then over in Eastern Europe, we've had some further flaring of tensions in Ukraine as we head in towards the March 16th referendum, where the Crimean population are scheduled to be voting on whether they leave Ukraine in order to rejoin the Russian Federation. That is very firmly expected to pass, but the real market reaction will depend on any Western and Russian response to the votes themselves. This could potentially take the form of economic or trade sanctions against Russia, but the EU do find themselves between a rock and a hard place, as if they place any sort of sanctions on the energy exports of Russia, this could potentially spike energy prices and as such really slow down the European recovery. As such, all focus turns to the exit polls, which are scheduled to be released on the 17th of March, that's next Monday. We do see some further key releases next week, most key of which being the FOMC rate decision, where all analysts are expecting another $10 billion taper. So across this period, it's been very risk averse, with the S&P 500 shedding as much as 25 points at some points in the week, as well as a very firm rally in core fixed income markets, sending the 10-year US yield well below the 200 DMA. Of course, we'll bring you all the key news flow as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, I'll see you again on Monday for the week ahead video.